Welcome to this week's MoneyFit Live webinar. My name is Todd Christensen, author and financial educator manager at MoneyFit by DRS. Glad to have you with me today. The topic is credit and job interviews. We're going to jump right into this because everybody wants to know, how is your credit involved in a job interview? What can you do to be prepared for it? That's what we're talking about today. So here's the principle. Credit scores and credit reports, what can be used, what can't be used, what isn't used, and why. Your credit report is used, your score is not. And there are very specific reasons why, and they are legal in most states, why some employers use your credit report. Let's just differentiate to begin with. A score think about it this way. A score is like the grade you get for taking your class. You get it after doing all the work, and it's an indication, a quick indication of how you mastered the information. The report is like the grade book. It lists all the things that you've done to get that grade, your assignments, your homework, your tests, your quizzes, your projects, and so forth. Your credit report is like your history of all the things you've done with credit. It lists the accounts that you've had opened over the last 7 to 10 years. It includes your payment history. That's the most important thing. Your pattern of payments. It includes who you've borrowed money from, how you've repaid them, what the current balance is, what the highest balances have been, so forth. It's the list of all the things you've done with credit, debt, loans over the last 7 to 10 years or more. The score is generated, like that grade. It's generated very quickly every time you apply for a loan or somebody wants to pull your score for the legal purposes. That's when the score is generated. It can change regularly. But the score is not part of the job application process. It is just the report. So who is looking at credit reports during the interviewing and the hiring process? There are 3 industries, 4 here we'll talk about, that particularly look at, you should expect them to look at your credit report. One is law enforcement. You're applying for a job with law enforcement, they're going to check your credit. Same thing with pretty much anything in the finance sector. If you're applying to work for a bank or a credit union or a lender or something along those lines. Government employees, state, county, local, federal, you should expect that your credit report will be part of the background check on that job, that hiring process. Really, anything that requires a security clearance, any kind of job that requires any kind of security clearance, they will likely include a check of your credit in the background check that they go through with all their employees. That said, there are plenty of other organizations that use credit as part of the hiring process. A large percentage of employers will pull credit on for some positions. About 1 in 6, though, will pull credit for every position. That's just part of their standard procedures. Well, I work for a nonprofit credit counseling agency. I don't handle money, but it's part of the required regulations in some states that my employer checks my credit every few years. That's just by law in some states. So it depends on what you're applying for, the type of organization or the organization. I've met people who have been applying for a cashier at a bookstore, and they still get their credit checked as part of their application process. So who uses it and how? Now, the employer can use it. You have to give actual permission to so that if the employer wants to check your credit at some point, they're not going to pull your credit. The employer is not going to pull your credit report and look at it. They are going, typically what they do is they will contract out a background check with a company that specializes in background checks, and they will add, pick and choose what they want in the background check. And if they want a credit report, they will get the information, partial information from your credit report as part of that background check. There are some things to know. It will be part, as I mentioned, part of a lot of different background things that are going on in your background check. Can be part of, it can be there along with any criminal records. Now, criminal activity is not on your credit report. Violations, parking and traffic violations are not part of your credit report. Library fines generally are not part of your credit report. There used to be, but most libraries have gone to a system where they do not send their patrons to collections for fines. But the background check can include a lot of this as a kind of a holistic view of your background, not just looking at your credit, not just looking at criminal, not just looking at maybe drug record or things like that. But it is part of that whole process. Here's what you should know. The credit report information that your employer gets cannot include your date of birth by law, because otherwise that could lead to age discrimination in the hiring process. So anything that's on a credit report that could be a factor in discrimination is going to be eliminated from the report that potential employer is looking at. So no date of birth, no marital status, your status, single, married, divorced, widowed, that is not going to be on there. There's not going to be any kind of information about current or former spouse. That kind of information cannot be on a credit report that somebody from in your HR department is looking at as a basis for your hiring. It does not include your score. I mentioned that before. It's just the report. It will include account information, account details, but it will not include any kind of account numbers. So you don't have to worry about identity theft. It'll list you have an account with this company or this creditor or that lender, but not any kind of lender loan number or account number. Now, here's what lenders are learning by looking at your credit report. And this is not necessarily directly what they're going to say they're looking for, but this is really what they were going to learn. Because you might say, well, why are they looking at my credit report? What does that have to do with whether I'm a good employee or not? It doesn't say anything about your qualifications, your job qualifications. There are some really good reasons why employers check credit, and then there are not so good reasons why they should be very careful about using it. But this is the reality, that if human eyes are looking at your credit report, they're going to take this into consideration, even if they don't do it overtly. Do they see a mortgage loan or two on your credit report? Says that employee is less likely to be moving. They're much less mobile than somebody who's living in apartments, moving apartments. You buy a home, you typically are going to be there for a number of years. So that's the reality. That's probably not something that is legal, but that's one of the things they're probably going to see. Do they see student loans? That might give them an indication of, did you say you went to college on your application? Is there any kind of student loan? If there's no student loan, that's not necessarily a bad thing. But if they see a student loan, they're going to say, okay, it's quite likely this person has some college education. And I'd never be one to say, go take out a student loan just so you could put it on credit report. No, of course not. But that's just something that, again, human eyes, being human, people are going to see and assume. Do they see late payments? Are there any kind of late payments on your credit report? Doesn't matter the reason why. There's going to be an assumption. Is this person dependable? That's kind of frustrating. It is true. But that is what people are going to assume. If you'll watch some of my credit videos and take a credit course at moneyfit.org/academy, you'll learn that the credit report is really generally is made for the lender, not for the consumer, and it was not necessarily made for employers. But this is the reality of our system at the moment. Do they see other employer applications? If you're applying for a job, not all employers do this, but many employers, when you apply for a job and they pull your credit report, it might show that you've worked for or have applied for a job with that employer. If they see 3 or 4 different other employers that you've applied for recently, or if they see 5 or 6 that might just be in the last couple of years, pretty good indication that that the job applicant is going to be continue to move, and is just job hopping from time to time. So, or if they don't see any, maybe they might be able to assume that this person is a little more motivated to stay with this one job. It just depends on what's on your report and how you come across in the interview. I will say your interview typically is more important than the actual credit report. A lot of employers won't even pull your credit report. Even if they're going to pull it, they typically don't pull it until after they've met with you at least once, if not twice or 3 times, and they are ready. A lot of job employers are not going to pull your credit report until they're ready to actually make the job offer, and they look at this as a last for one last reason or one last tool in their toolbox of hiring you. Overdraft. If there's an overdraft, now overdraft doesn't go onto your report as overdraft. It'll show as a collection, typically with the original creditor being a bank or a credit union. But again, the assumption here is you have a lot of overdraft debts in collections. Maybe there's some issues with stability or organizational problems. A lot of stuff that people can see here negatively, but also if you turn it around, a lot of stuff that can come across as positive if you don't have any of this. And then if you have a high amount of credit card debt, here is where we get into why many creditors start looking at or can justify looking at your credit report. If they see a large amount of debt, credit card debt, collections, if they see some financial hardship and challenges going on through your credit report, it is not on an individual basis, but as a group, people who have that kind of background on their credit are going to fall into a category where they're going to be considered higher risk for theft or embezzlement at work. That's plain and simple. Just telling you like it is. That's why employers are going to. That's what employers are going to look at if they see a large amount of debt. It's going to be a motivation for some employees to consider stealing from employers. It's not a pleasant thing, but that's reality. And then if they see a lot of collection accounts, here's another one that is, I think, pretty a good explanation and a good justification for checking credit. If they see a lot of collection accounts, it's a pretty good indication that employee is struggling financially with their personal finances and is going to be, in reality, less productive at work than if they didn't have collections. Top 2 reasons why people are unproductive at work. 1, relationship problems. 2, personal finance issues. And the reality is that many relationship problems are caused by personal finance issues, household issues. So financial problems that include collections indicate that the person may be at work, they may be prompt, they may be there on time, but while they're there at work, they're likely, they're more likely, not likely, just more likely than if they didn't have collections, to be spending time talking to personal finance, the collection agencies, or figuring out how to transfer money from one account to another, or doing whatever it is to stay afloat. That's the productivity is the main justification for use of credit reports in the hiring process. At least the one that as far as I am concerned, I think that's the best justification, or the only justification sometimes. Now, if you are into conspiracy theories, you might also like to know some of these things. Well, if now employers cannot ask your age, they can't ask your date of birth, because that is illegal. If they pull your credit report and they see that you have an account that was opened 30 years ago, they already know that you're at least 45, 50 years old. That's the one thing that they can assume from looking at your credit report. They can look at the different store accounts. And the types of stores that you have accounts with, and can make assumptions from those accounts. So if you have a Home Depot versus a Victoria's Secret account, or versus a Sears account, those are very specific demographics that they can take information from if they're going to see that on your credit report. Another thing to consider is credit reports include all your addresses that you have used whenever you've applied for a loan, or a credit card, or a store card, or a job. The credit reporting agencies receive that information and they use it to update your credit report. If an employer, a potential employer, sees you have 15 different addresses on your credit report that typically only goes back 10 years, that's an indication, again, as I mentioned before, that there's some instability. There's a high likelihood that you're moving a lot, that you're moving from job to job even. So be aware that a lot of addresses on your application, or on your credit reports, from applications that you fill out, that's where your information on your credit report comes from, is whenever you fill out an application, you give them permission to report that and update your credit report. But that's one of the drawbacks of having multiple addresses, is it shows your tendencies to move frequently. Now, if you're moving within the same city or the same area, may not be that big of a deal. But if you have 4 different or 5 different state addresses on there, the employer is going to wonder, are they really here to stay, or are they kind of nomad of some sort? Okay, know your rights. Understand that as you're looking as the employer has the right to look at your credit report, if you give them permission, by the way. They cannot look at your credit report unless you have signed a separate form. It can't be buried in your application somewhere. It can't be just a check mark. It's going to actually be a separate form that says you give us permission to look at your credit as part of the application process. Just as they have the right now, if you've given them the right to do that, you also have certain rights. Is it legal what they're doing? It does vary by state. There are 15, 20 different states that have varying degrees of controls upon what an employer can do with your credit report. Some states say no, absolutely not at all. Others will specify what can and cannot be looked at or considered during the application process. There are websites you can look at you can just go online and do a search, an internet search for state laws, credit check, employment process, something like that. And you'll find a few that will give you'll be able to find your state and see what the law is there. As I mentioned, they've got to have written consent. It cannot be something that they try and sneak in. If you're worried that, did I give them permission? If you remember filling out the application, but you did not see a credit check, then they're not going to include it. And if they do, then you have some rights, some recourse to work with them, that they may have done so without your consent. But I doubt that it's very uncommon that they're going to do that, because most companies know that if they're checking your credit report, there's some serious consequences if they misbehave. So there's the separate form I mentioned. Now, know this as well, that if you've ever filed for bankruptcy, they cannot make the decision to hire you or not, in most cases, based on whether you filed for bankruptcy. They can't just say, if you filed for bankruptcy, don't even bother applying, or, oh, this person filed for bankruptcy, we're not even consider the rest of the application. Bankruptcy is not a permitted factor. However, all the information that's included in your bankruptcy, all the account information, the balances that were written off and so forth, all that information is going to be on your report. It's going to be showing. So there is still going to be showing some negative information. But there are some, as I mentioned, there are some industries that will not consider bankruptcies. Just like law enforcement, it's pretty hard to find a job in many places in law enforcement if you have a bankruptcy in your background. State laws, just check with yours, find out where and when that law was passed, and what it specifies about what can be used. Now, you want to prepare for your job hiring process. Check your credit first. Before you apply, know that you should be looking at your credit report. Go to annualcreditreport.com. Since 2004, when the FACT Act went into effect, American adults have the right to check their credit from each of the three main credit bureaus or consumer reporting agencies, Equifax, Experian, and TransUnion, every 12 months. Check your credit report. It's not going to come with a score. It'll be just the list of all the information, all of the accounts and the payments and the statuses of your accounts. Make sure it's accurate. Know by looking at it what your potential employer is going to be looking at when they are pulling your credit report, so that you can be prepared for any questions they might have. Check your credit report. Do you want to check your credit score? There's really no, again, they're not, since the employer is not checking your credit score, you may not need to worry about checking your own credit score. But if you do, use a free service. There are lots of them out there that will offer a free credit score if you sign up for a free subscription. These are not scores typically that most lenders use, but they are good for educational purposes, and I use them. And so that if I see a score drop unexpectedly or go up unexpectedly or change unexpectedly, either way, it's a clue to me that I need to check what just happened on my credit report. I didn't apply for anything new, or I didn't miss any payments, or so you check your credit report to see if there was any fraud going on or any mistakes. So you want to keep that. That's what you would want to do with the credit score, is just watch for patterns. If you do see errors, if you pull your credit report and you do see errors on there, that there are accounts that were closed 7 years ago or more, or 10 years ago, then you can dispute it. Now, if you close an account, you pay off a collection account, you might think, hey, good, it shouldn't be on my credit report. It will be on there for 7 years from the time you pay it off, typically. Credit score, the credit report hangs on that information because credit scores are trying to use patterns of behavior. They're not looking for a snapshot. Snapshots, it's impossible to predict future behavior based on a snapshot. But if they can see patterns of behavior over the last 7 to 10 years typically, then they can predict future behavior. And that's why what credit scores are trying to do. They're trying to predict future behavior based on past behavior. And it's got to be, the more recent the behavior, the better predictor it is. So if you pay off a collection account, it's still going to be on your credit report for up to 7 years. It may show a zero balance, but it's still going to be there for 7 years. If you miss a payment, you get caught up on it as soon as you can. Even if you get caught up, it's still going to show, if you were more than 30 days late, it's still going to show that it was late. So do dispute errors, but know that just because you made a mistake doesn't mean you can remove it. And just because you correct a mistake, fix an error, a problem in your finances, doesn't mean it's going to disappear from your credit report. It's going to be there because that's the behavior, the pattern. A one-time mistake is not going to kill your finances. But if you make mistakes regularly, that's the pattern that the credit scores are looking for. But to dispute your errors, it's really simple. You go to annualcreditreport.com to get your reports. And then if you see errors, you go directly to the consumer reporting agencies, Equifax, Experian, TransUnion.com. And right from the home page, you could just do a search, do a find for error dispute. And they're all right on the home pages. It's pretty simple. You can go through it in about 5 to 10 minutes to dispute an error. It's going to ask you for your report number or to log in or sign up for a free account. And then you find the error, you click on it, and it brings up a drop-down list of why you're disputing it. What's the reason? It doesn't belong to me, or it's an error in the balance or other type of thing. There could be anywhere from 10 to 20 different reasons you can choose from. And then you submit it, and the creditor has up to 30 days to respond. Typically, when something is under dispute like that, it is not going to be included in your credit score. And I would be surprised if it ends up on a credit report like an error, for an employment background check. So dispute errors to get them removed and fixed. You can also, if there was something that you would like to explain, your credit, you have the right, all American adults have the right to add a statement to their credit report. Each of their credit reports, you would add it separately at Experian, Equifax, TransUnion.com, each of the three. You can't add it on one and expect it to be added to the other. It'll be just one at a time. But let's say you wanted to explain why there is why there might be 4 or 5 different collection accounts on your report. Perhaps it was a medical emergency, you were in an accident, you were out of work for 2 months, but since being back to work, you've been making payments on time for everything else. Whatever it might be, you can add a statement explaining that if you choose. Typically, I'm not going to say that all employers are going to look at your statement, but if they do, at least they can get an understanding of why they see what they do see. That statement, what I usually recommend is for explaining errors that continually pop up. Maybe you have an uncle or a cousin that has the same name as you, or somebody else in the same town or nearby town has your same name, and information continually gets put on your report that belongs to them. You can add a statement explaining that if you struggle to get something disputed and fixed. Be prepared. It's an important. There's a reason why this is the motto of the Boy Scouts of America. It's really critical and very helpful to be prepared for your employment interview. 3 things to do to be prepared. 1, get current on payments as much as you can. If you can get paid up on your accounts, any kind of payments you have that are late, get paid up on them so that they are not reporting as late. It looks a lot better to both lenders and employers. Pay down your debts if you can. Now, if you are unemployed, I'm going to say don't focus on paying down your debts. Make sure that you keep your funding, whatever your income is right now, whether it's you're using savings or whether you're using unemployment. Use that money to live and survive and pay your rent and mortgage, pay your food, pay your utilities. But if you are in a position to be able to pay down your debts ahead of applying for a job, go ahead and do it. Above all, be honest. Be honest with yourself. Be honest with the employer. Be upfront. when you are getting ready to apply for a job and you go into that interview, know that at some point that employer might look at your credit report and might see these 3 or 4 or collection accounts, or might see that you had a foreclosure, or that you went or had a repossession, whatever it might be. If it was a mistake, if you went through a hard time, that's easy. Be prepared to say, look, I had the medical issues, or I was out of work and I had gotten into too big of a car payment, whatever it might be. Just be upfront and honest. If, though, it's just was overspending, again, this is where you have to be honest with yourself and with the employer. You can just say, look, I recognize I got into a overspending issue, and you're going to see that on my credit report. This would be particularly something you would share on the second or third interview if they haven't asked you to pull the credit report. Or you might just say, are we at a point where you're going to look at my credit report soon? Because I just want to share a couple of things I think are important for you to know. And be honest with them. Tell them what you've learned. Everybody makes mistakes. Everybody makes financial mistakes. Just tell them, explain what you're going to see, what you've learned, and how things are different now than they were 4 months ago, or 8 months ago, or 4 years ago. Okay, if you're not hired, if they've checked your credit report and they decide not to hire you based on what they see on your credit report, they have to go through a certain process. They have to give you basically a heads up saying, we're about to make an adverse decision, a decision that will adversely affect you based on your credit. They're going to have to give that to you. Most employers don't want to have to do that. There's a whole legal thing, and the reality is they will find another reason not to use as justification not to hire. But if they do, if that's the only reason they can feel they can use to say we're not going to hire you because of what we saw on your credit, they have to give you that heads up, and that they'll give you a few days, 2 to 3 days. That gives you some time. You ask them what collection consumer reporting agency did you use to pull my credit? They have to tell you if it was Equifax, Experian, or TransUnion. You then can get a free copy of your credit report and look to see what is it that they're seeing on here that they must be considering negative. It also gives you a chance, after you look at it, to be able to submit to them, and I would do it in writing or email at least, if there's something you want to explain what they're seeing, if there's an error especially, but maybe something negative, to explain what it is that they're looking at, why it's there, and how things are different now, and why they should not worry about it. Okay, that's kind of the process of credit reports and the hiring process. If you have liked what you've heard, or you found anything in here beneficial, please consider liking this video, maybe even subscribing. I'd invite you to subscribe to our channel. Not only does it tell us that, hey, we're doing, this is a good topic, or we can do something similar to it, but it also means that other people doing a search for similar topics will find this video and have access to this information. I also invite you to go to our website, moneyfit.org. You can find a lot of good information there on credit and credit reports and credit scores. In fact, if you go to moneyfit.org/courses, you will find a credit basics course there. It's free, 3 lessons, finish it up, go through it, and you can even get a credit certificate of completion for doing that. Thank you for joining me today for this topic. Do find our archive of previous topics at moneyfit.org/live. You'll find there that we've got basically weekly classes that we've archived going back to the middle of 2019 when we started this. Watch the same website for an announcement coming up what the next webinar will be on Thursday. Every Thursday we do these, and you'll be able to find a link there. If you have any questions, I am always available to answer those or to address any concerns you might have, or if you'd like more information about this or additional resources. Todd at moneyfit.org. My direct phone number is 208-286-3283. And I do look forward to hearing from you if you have any questions, concerns, comments, insight, etc. Thank you again for joining me, and I hope you have a great day.